Europe is actually dominated by the ECB. How much do you trust Mario Draghi to be successful with the QE program?
Mario Draghi has, throughout this crisis, from 2010-11 on, played a very strong hand and done that exceptionally well. His ability to pull QE off, to continue to recover the European economy, to create some growth and dynamism in the region, shouldn't be underestimated. And we think that the actions and the scale of activity that the ECB is undertaking at the moment are beginning to bear fruit now. The euro is lower, economic activity is up. France even is beginning to respond a bit with slightly better data recently, alongside good activity in Spain, Italy and Germany. Those are good things that the ECB and the cycle is providing for the EU, and they should be applauded and continued.
Do you still expect a rise of the US interest rates this year?
In a word, yes. The US economy has been growing steadily. Not excessively, but steadily for some quarters now. We think that, therefore, Chairman Yellen will move in September, but the move will be very gradual. You're not looking at an aggressive interest rate rising cycle, maybe something that looks like a quarter, and therefore rates edging up towards perhaps 1% sometime in 2016.
In prospect of the turnaround situation in Europe, do you favor equities in Europe or even US stocks?
We think that both can make progress. We just come off the back of a very strong earnings reporting season in the US, whereby companies have all been able to offer more buybacks and dividend surprises to investors. So the US economy and corporate health is good there. Having said that, there are stronger drivers in Europe for share prices. QE until September 2016. The weak euro has yet to come through in earnings for major international companies. And if we do get that sort of beginnings of demand come through in the domestic economies in the EU, then some of the mid and small cap stocks can benefit. So both markets make money for investors, but the European equity arena is more attractive than the US.
And if you look at the Swiss economy, on the Swiss companies and the SMI, in your perspective, what is the forecast until the end of this year?
I think that the Swiss economy, despite the strengthening of the Swiss franc, is actually proving remarkably resilient. Indeed, some of the flexibility in the Swiss labour market and in the corporate structures means that they're able to cope with the high exchange rate level. With Europe recovering around Switzerland, then actually, again, you can see value being available to investors in the Swiss domestic market. And we might point from our own activity to favouring some of the banking stocks again, where for the first time balance sheets are strong enough to allow dividend activity to take place, perhaps a surprise to the upside. And UBS would be a prime example of that recently.